We're going to trade some of the day's worst performers. Up first, Adobe, among the worst laggards on the S&P and NASDAQ 100, despite beating on the top and bottom lines for the third quarter. Here with our trades, Brian Vendig. He's president at MJP Wealth Advisors. Brian, welcome. Good to have you with us. Take us through your thoughts on Adobe.
Thanks, Tyler. I think Adobe is definitely a buy. When we look at the numbers, they had an overall good quarter. And again, there's been a lot of excitement this year that's been priced into the stock due to the AI frenzy. So it looks like today's price action seems more like investors are locking in some of their profits. However, the company is expected to raise prices November 1st on a lot of their cloud offerings, which is going to be good for their margins. And we know they're in process of trying to close on a $20 billion acquisition in the private cloud and design space, which also will add some momentum for the stock moving forward. We just think they're in the center of a lot of exciting things like AI, cloud, software, and that's great from a reoccurring revenue perspective. But we recognize that the stock is up about 57% or so this year. It's had a pretty good run. Its forward PE around 35 is a little pricey in the market, so we'd probably be buyers on a pullback.
All right, let's turn then to Schwab. The firm saying it still hasn't recovered from deposit level attrition after its takeover of TD Ameritrade, and client assets held by TD continue to walk out the door. What would you do with this one?
Well, Kelly, I'm going to be consistent again. I'm going to give this one a buy. And it's because I think Schwab is a great company. And right now, the market is not really appreciating the value of the company itself on a moving forward basis. And you're right, the stock has really been crushed this year and hasn't really recovered from the steep decline in assets, which really goes back to March as part of the overall banking crisis. But keep in mind, they just recently finished an integration with TD Ameritrade, which really gives them an opportunity to capture some cost synergies, focus on some products and solutions that they promote to their clients and customers, and also just consolidate assets on one single platform, which can create more opportunities for growth. And again, we think the forward PE in this market is pretty attractive. So we think the stock still has some room to run after the sell-off eventually passes this week.
All right, let's move from tech and financials to Lennar, the home company, lower despite posting a top and bottom line beat. Its profit fell year over year because of lower home prices. What do we think of Lennar?
Well, Tyler, for me, this one I'm going to have to give a sell. And I was a little turned because the valuation is very attractive, with a forward PE of around 13. However, there's plenty of macro headwinds that makes me cautious about this stock, hence why we're being sellers. And look, in this most recent quarter, revenue was down, even though deliveries was up. And that's because right now, buyers of homes are a little bit conflicted where interest rates are. And Lennar has to give away a little bit on price, which has been impacting their margins. And right now, when buyers are looking at homes, they're saying, do I buy now at these high rates or do I wait for rates to come down? So even though there's this demand-supply imbalance, we really don't want to be exposed right now to home builders when there's still a little bit of this interest rate drama. Now, again, Lennar is a great company, and this would be just one of those that we might avoid for now and just wait for a little bit more clarity on rates and some of these imbalances to play out.
All right, Brian, thank you for your insights today. Have a great weekend. Brian Vendig, we appreciate it.